This is Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour.
I think it's great that we made a deal today instead of playing games and maybe not making a deal at all. I think it's, I'm going to let you say, but I think it's the biggest deal ever made.
The European Union agrees to a U.S. trade deal with a 15% tariff rate on most exports, including cars, averting what could have been a damaging trade war. The U.S. Treasury Secretary, and Chinese Vice Premier to meet Monday in Sweden, working to extend their trade truce and widen the discussions. But Friday's tariff deadline is still in focus for investors, with a week of earnings, data and central bank decisions that could define the second half of the year for markets.
And I'm Annabelle Drewlers at the World AI Conference in Shanghai. We'll be hearing exclusively from Alibaba Cloud founder Dr. Wang about China's AI ambitions and the talent war that's shaping up between the US in Silicon Valley.
And take a look at how we're setting up in the markets, because it's the busiest week when it comes to U.S. earnings. We're talking about 40% of the S&P 500 reporting this week, including big tech. And, of course, we have the FOMC decision as well. No change expected there, but what we'll be watching is also the Treasury space, because we do have the Treasury's latest views when it comes to quarterly debt sales. And remember, we also do have auctions. It's late in the month, so that could get a little bit complicated. We've also been watching the dollar, and the other side of that trade is the euro. Of course, we have seen the gain against all its G10 peers after that trade deal with the United States. We're talking about 15% rate when it comes to U.S. imports, and already we had seen that 1% gain in the last week as well. Take a look at how the Japanese yen is also trading, because we have seen a little bit of strength against the U.S. dollar. In fact, when it comes to Japanese stocks, we saw those gains and that incredible rally. Guys, switch up the board and you can see how Nikkei futures are setting up, because we have seen, of course, Japanese stocks in overbought territory for the topics, at least above that 70 level. So we'll be watching whether there is a little bit more risk going forward. Nikkei futures at the moment, though, gaining ground. And you have the Bank of Japan, of course, later this week, also coming out with its rate decision. Not really much expected there. Japanese yen holding at that 147 level. And the offshore yuan, a little bit of marginal strength against the U.S. dollar. Remember, Haidi, we have seen the yuan pretty strong. An 8-month high. We did get industrial profits, though, falling for a second month.
And some of that risk appetite, Shery, also depends on what happens between the U.S. and China, right? Whether this trade truce gets extended. U.S. and Chinese negotiators set to meet in Stockholm later on Monday. A third round of talks now aimed at extending that tariff détente, if you will, and widen the discussions to include Chinese oil purchases. Let's bring our China correspondent Mimin Lo, who joins us out of Hong Kong. So, I mean, we're hearing reports that potentially we see an extension of another 90 days. What are we expecting going into this round of talks?
Yeah, the bar is already quite low, because Scott Bessent a few days ago had signaled that there could be this extension of the trade truce. He didn't give a timeline, but SCMP is now reporting, based on sources, that this trade truce could be extended by another 90 days. Whether or not there will be any further sort of even minor achievement, a symbolic achievement beyond that, I think that will be a win for both sides. But of course, this is a third round of trade talks led by He Feng from the Chinese side and Scott Bessent from the US side. Possibly one of the more meaningful rounds of trade talks, given the first two was really focused on stabilizing the economies and bringing down the tariff levels from the triple-digit level. But this time it could focus on deeper issues. China, for example, has been complaining about these tech curb and restrictions, and has been saying that by easing these restrictions, it would allow China to buy more goods that would reduce the trade deficit that the U.S. has with China. And meanwhile, the U.S. will likely raise the issue of China's industrial overcapacity, the shifting towards consumption-led economy. But if the two sides commit to a truce and agree not to impose further tariffs in the next 90 days, that would, of course, create a favorable atmosphere for a potential meeting between the two leaders, President Trump and President Xi, potentially in October at the sidelines of the APEC summit in Korea. But I'm particularly watching for when or if the U.S. does announce these sectoral tariffs on things like semiconductors and pharmaceuticals. What happens then, and will that trade truce still hold? But we'll see how the talks go over the next couple of days.
How much does Beijing need this when we continue to see that pressure on the economy there?
Yeah, they do need it because the tariffs have, of course, been crimping on industrial profits, and we're seeing profits down for a second straight month, down by 4.3% in the month of July compared to the previous month. It was down 9% or so. So yes, the pace of that decline has been slowing down, but it really still highlights the importance of reining in this, what the government is calling disorderly low-price competition. The government has pledged to phase out some of these outdated industrial capacity, but it's going to be a very painful transition for China because that will likely mean job cuts. And for now, these companies, as they look for other markets outside the U.S., the competition within China is becoming more intense, and that's why the government has been summoning the food delivery platforms, calling them to rein in their promotions, for example, stepping up price investigations into the EV sector. But this, again, a concern around the vicious cycle there. If profits are down for companies, they will be they'll be more reluctant to hire and to invest, and then that has an impact on consumer sentiment as well.
Bloomberg's China correspondent Min Min Lo there with the latest as we continue to watch this new round of US-China talks. In the meantime, the US and the EU striking that trade deal imposing a 15% tariff on most EU exports, including cars. As part of this pact, the bloc will ramp up purchases of American energy and boost investment in the US while sidestepping President Trump's threat of steeper levies.
We've reached a deal. It's a good deal for everybody, I believe. And I think you were saying this is probably the biggest deal ever reached in any capacity, trade or beyond trade.
It is.
It's a giant deal with lots of countries.
Let's bring our Bloomberg senior editor, Wendy Benjaminson, who joins us now from Washington. And Wendy, we sort of had a prelude to this, almost the sort of Japan deal blueprint, right, of the 15%. President Trump has said this would be the lowest point where he would negotiate from. So is it the biggest of all deals, as the president says?
Well, I think he's referring to the fact that the U.S. and the EU, together are the two largest economies in the world. So I believe that's what he's talking about. But of course, the president usually speaks in a lot of hyperbole. But it is a big deal, and it settles. Not everyone in Europe is happy with it, but it does seem to settle, the arguments over whether tariffs should be 15% or 30%. Of course, when you look at the fine print, there are some other numbers in there. For example, steel will still be at a 50% tariff. The president said that the EU would open its markets to U.S. automobiles, but U.S. automakers would have to adjust their cars to fit that market. And so it's not quite as easy as he made it sound.
The Italian Prime Minister called this deal sustainable, but it seems some industry groups in Europe were not too happy.
That's right. There was a German industry group that worried about the effect of jobs, and there will be some people who, think that it's because it changes the balance of trade between the two groups, the U.S. and the EU, where the EU had charged the U.S. much more than the U.S. was charging it. Now that has rebalanced to where the U.S. is charging 15% and Europe is charging 0% for it, the United States. So, yes, I can see why groups in Europe might have second thoughts about this. But the leadership seems to be rallying behind Ursula von der Leyen, who made the deal right now. And, of course, remember, all the fine print is yet to be worked out. There is still a lot of talking to do ahead.
A lot of talking also between Washington and Seoul. We are now hearing from South Korean media, 통화일보, saying that South Korea is actually considering U.S. rice imports, not to mention a shipyard acquisition. What's the latest when it comes to those Washington-Seoul talks? But because we have seen some of those negotiations delayed in the last few weeks as well.
Yes, they have been delayed. And remember that everyone is scrambling to meet this Friday's deadline that Trump imposed on the entire world. But the South Korean finance minister and the U.S. Treasury Secretary are meeting this week in the U.S. They will try to work out some of the agricultural products and, as you said, rice and some of the other imports that they're talking about. But Trump did say today that any country with whom he hasn't made a deal by Friday or even before that will get a letter setting their tariff rates. And this is clearly his preferred method of setting tariffs, is to just set them in a letter, and that's the end of the negotiations. Because these negotiations usually take years, if not months, to work out, and he is, as we all know, very impatient to get things done.
Which is quite interesting in the context of this reporting that we're hearing, that we could see another 90-day extension for the China trade truce, right? Is there a sense of sort of kicking the can down the road, because that's obviously one of the more difficult sets of negotiations? What's the strategic thinking, do you think, from the White House? Yeah. Right.
Well, earlier this past week, the Treasury Secretary, Scott Bessent, said he expected the talks to be suspended, or to be pushed back another 90 days. So I think it is just because China is such an important importer to the United States, and is tied up with so much geopolitics and so many complications in trade, especially in technology and national security issues. So I think they really do need some more time to work that out. But that is the exception that proves the rule, I believe.
Wendy Benjaminson, Bloomberg senior editor, there with the latest on those ongoing trade negotiations. Coming up on the Asia trade, UBS discusses the global scramble for U.S. trade deals ahead of Friday's deadline. Plus, we'll be live at the World AI Conference in Shanghai, unpacking the future of artificial intelligence with the CIO of tech investor Monolith Management.
But first, our exclusive interview with the Alibaba cloud founder, Wang about the future of AI in China. That's next. This is Bloomberg.
Premier Li Qiang says China will lead the creation of an international AI organization to ensure the technology does not remain in the hands of a few nations. He made the announcement at the World Artificial Intelligence Conference in Shanghai. Bloomberg's Asia tech correspondent Annabelle Jewellers joins us from there. And Belle, the premier didn't necessarily name any country specifically, but it seems that the tech tensions were looming large.
Yeah, I think you can sort of read between the lines on exactly where that sort of sentiment was headed and directed, and specifically at the US, which, as you said, he didn't mention explicitly, but still, the tagline of this event is global solidarity in the AI era. So, and as you said, that was really the tone that Premier Li Qiang struck during his opening address for the World AI Conference. Yes, there's the risk of job losses. Yes, there's the risk of global upheaval, but that's also why he says that nations do need to work together. And also, to your point around this new initiative that's being launched, why China also announced that they're launching a new initiative called the World AI Cooperation Organization, and ostensibly that's about countries being able to share AI talent, insights, and also some of their different initiatives. Now, whether that is really the message that lands with the US is certainly another matter, but it does tell you that is where competition is currently headed. It's not just around who can come out on top and really dominate in AI infrastructure, and we see the US really ahead of that in that, of course, but also who can set AI governance and standards around the world. And China is making a very big focus on the global south in particular. It's where a lot of their attention is currently headed.
You had a big interview over the weekend. Tell us a little bit more about that conversation.
Yes, I had the opportunity to speak with the Alibaba cloud founder, Dr. Wang. This is the person that really built out Alibaba's cloud ambitions from just like a handful of service supporting the e-commerce industry or sector of the business into really the industry behemoth that it is today. Wang is certainly a very deep thinker. He didn't really want to be drawn too much into the tensions between the US and China, but certainly we did talk about the role that China can play globally in terms of governance, and he says that that can be a role, and also spoke about the significance of that. It was a very wide-ranging conversation over about an hour. We also had the chance to speak about the talent wars that we see in Silicon Valley, where they're spending hundreds of millions of dollars is what he says is the right approach, and also as well about how the AI competition landscape is shaping up in China, and the different direction that it's assuming as well. But take a listen to the highlights.
I would say, as just like a single organization or single person, you really cannot go that fast for a long time. Okay, you collapse. Okay, like I can work in for 3 days and without any sleep, but not anymore. Okay, not anymore. And you really cannot work 30 days and don't have any sleep. Okay, there's no way you can do that. Okay?
Work ethic in China is famous.
But I would say collectively, we can have a very fast iteration. Okay, so that's why I really like a stubborn mindset. So basically, DeepSeek could do something very fast. Okay, and then we also have Queen. Okay. And then we have Kimi, okay. So collectively, and we can push that fast. I think that's okay. Actually, that's what I think is important. Otherwise, why we need that population, okay? So that's why when people get together, and it's not just for competition, whether you win or not. It's basically you can have the very fast iteration of the technology because of this competition, or because and you work fast this time and you slow a bit, and then other guy move very fast, and eventually we slow down a bit. And if you're good enough, you can catch up again. And I don't think it's brutal, but I think it's very healthy because, and when we work with the people that is very competitive. That would make you much more competitive, because that was the way how I think the new technology would be invented. Yeah,
you're talking, I guess, about more of a marathon, not just a sprint race.
Yes.
Is there space, though, for new contestants to enter that race today?
I would say, at least for the AI, it's a marathon, because I think nobody could really see, if it's a long journey, it's definitely in the very beginning. Okay.
I think something that we see right now is certainly money that's being directed at strong talent.
Yeah.
And there's stories, of course, in Silicon Valley we see of people that are getting hundreds of millions of dollars. And what do you think about that?
I think it's. I don't think it's the, let's see. It's a typical way of doing things. Okay, I would say that. The reason is very simple. With one example, when I started the Alibaba cloud, the first thing I did, that was in 2008. The first I did to visit the Silicon Valley, and to try to get talent. Okay. And after talking to all the people, and you realize actually we don't have much talent there, because it's new.
Okay.
So, and also with some of the talent, it's just too expensive. Okay. And too expensive basically means, okay, you don't know whether the cloud business is there. Why need to hire these people? So it's really about the innovation. So when you are in the early stage of innovation, I don't think talent is a problem, because the only thing you need to do is to get the right person, not really the expensive person. Because if it's a new business, if it's true innovation, that basically means it's talent. Nobody cares about them. Okay, otherwise we're going to working on that. So for today, what happened for the Meta is because they are very much focused on the existing success of the business and existing establishment of technology. That's my view. Okay, so I think we have a tremendous opportunity to look at technology nobody knows today, and these are talent, but these are. I can't say it's cheap, but it's it's available for you. Okay, so that's really about the vision. Where you want to where you want to go. And there's a lot of similar things, happened during the last 20 years or so. Whenever everybody knows that these are talent, and it's better for you not to get in. Mm-hmm. And at least that's not new. That's my so like personally that I hired Zhou Jing now. He's the leader for the Queen. Okay, you probably met him, when you were in Hangzhou. I personally interviewed him. 15 years ago, and we got talent. Now he's leading the Queen. Yeah. But so that's
there's not really any justification. Then it sounds like you think for such huge salaries.
That's not what I'm sorry. What happened in Silicon Valley is not the winning formula. That's what I believe. Yeah.
That was the Alibaba cloud founder there, Dr. Wang Jun, speaking exclusively to us on Bloomberg Television. As we said, it was a very wide-ranging conversation. It lasted for an hour, so plenty more insights, and we're going to get, of course, a lot of those coming up as well. But just some of the key points he made in addition is that he's saying that really OpenAI and ChatGPT has created sort of a bias in the market, sort of skewed people's perceptions about what AI can do. And he really says moving forward in the years to come, there's going to be a lot more innovation that looks a lot different as well.
Bloomberg's Asia Tech correspondent Annabelle Drewler's there showing us some of those changes occurring also in Shanghai from that artificial intelligence conference. And you can watch also more on this interview later on the China Show at 10:30 a.m. Hong Kong time. And subscribers can check it out on the terminal and Bloomberg.com. Still ahead, that World AI Conference coverage continues with an exclusive interview with Monolith Management's co-founder and CIO, who shares his vision for the future of artificial intelligence in China. This is Bloomberg.
Take a look at the week ahead, and trade is taking centre stage again. President Trump's deadline for the U.S. tariff pause set to end on Friday. U.S. and Chinese officials are also meeting on Monday to try and extend that tariff truce beyond that mid-August deadline. Aside from trade, also watching central bank decisions. The Fed expected to hold rates on Wednesday, despite President Trump's repeated calls for cuts. That rate decision coming ahead of the Friday U.S. jobs report that could show an uptick in unemployment. Closer to home here in Asia, Singapore's monetary authority is seen maintaining its policy settings when it meets on Wednesday. The Bank of Japan is also expected to hold rates steady on Thursday. This is a picture when it comes to trading in FX at the moment. This has, of course, a lot of cross currents, many of them positive when it comes to these trade developments, and certainly one to watch when it comes to trading in dollar yuan is how this next set of Stockholm talks go between the US and China. We're hearing reporting that potentially there will be that extension of another 3 months of that trade truce to give a little bit more time for what is undoubtedly some of the most complex trade negotiations in this picture. Dollar yen is trading at about that high 147 level, and taking a look at the euro as, of course, we've seen the EU and the US reaching that 15% tariff deal. Let's take a look at how investors are digesting all of this. Garfield Reynolds, who leads our Markets Live Asia coverage, is with us more. So, look, a lot of assuring news certainly is happening.
Yeah, this is very much the playbook that investors were expecting and had been expecting, for a while. We had the modest shock and awfulness of the letters when they came out with the this is what you get, followed fairly rapidly by a trickle of deals where countries got significantly less, less than was in the letters, and certainly significantly less than had been in the Liberation Day announcements. And that trickle has turned into something of a flood, with Japan last week and now the EU this week getting 15% across the board, including very, very sort of welcome on that front for those economies. 15% also applying to cars. Autos had been a major sticking point where the Trump administration had been setting 25% on cars and on car parts. Instead, we're getting 15% on cars at the very least, and that's a positive. There's also been this coming to the fore, these investment and investment deals, so to speak, and also commitments to buy more US products, though in a lot of cases those products were likely to be bought anyway. Energy, Europe is trying to wean itself from any lingering dependence on Russia. That pretty much requires them to buy US oil and gas. Also, Trump is saying that they are promising to buy lots and lots more weapons. Well, they were already going to be doing that in order to meet those increased NATO commitments. So there's a lot of vague stuff that is supposed to be better for the US, that's supposed to be a win for the US. Ultimately, though, investors are going to focus on the idea that, at least in the short term, the trade war rhetoric has been dialed right down. The impact in particular to other economies is smaller than it would otherwise have been. The EU, remember, was being threatened with as much as 50% at one stage and 30% more recently. So that's good news, provided that we don't get any fresh volatility as the deals get ironed out or not. We've already got some back and forth about what role pharmaceuticals will play. Investors are going to be mostly welcoming of this, but they're also going to be very focused on what does the Fed bring, what's going on with the US economy. As Haidi was mentioning, those earnings that are coming, it is a very, very big week, and to some extent investors are now going to be able to look past the trade wars to the fundamentals as they are becoming apparent in the here and now.
No change expected from the FOMC, none from the BOJ either, but we are watching sovereign debt markets. We do have auctions in the U.S. We have the Treasury with its views of quarterly debt sales.
Yes, we do, and we also have, of course, these days, central bank guidance is a dirty word almost, but we will have those indications of what is or is not coming next. There's the potential that the BOJ in particular will, now that the trade situation has become calmer, make it clearer that it is biased to hike rates sooner rather than later. And if it doesn't, then that would be a big risk for the long end. We saw declines in long end yields for JGBs at the end of last week on the potential for BOJ hikes. So that's something to watch. In the US, the action is more towards the other end, in that while there's been some signals that there will be dissent, overall the tone from the majority, and including Jay Powell, has been more towards holding rates for the moment because they're worried about the impact of tariffs on inflation. That impact is becoming apparent, and there's also the impact of this drumbeat of criticism of the Fed from the government that it should be cutting rates, which paradoxically makes it harder for the Fed to cut rates because it doesn't want to be seen to be giving in. So given that commentary, given what their concerns about inflation, the Fed is really going to need to see a major deterioration in data before it says, okay, we're going to cut rates, which means that the data that comes out after the Fed, the jobs report, that will do a lot, at least for how rates traders position themselves going forward, whether we're going to see just one cut this year, or whether we're going to see two. A lot of that's going to depend on the data, along with this volatility-inducing potential from what the FOMC says in and after the meeting, and how Trump and Bessent and Lutnick respond to that, and whether we get this continuation of the conflict between the US government and the US central bank, a conflict that cements the down path for the US dollar.
Bloomberg's Garfield Reynolds there with some of the big questions that we're watching, perhaps beyond just the policy settings from the Fed this week. But take a look at how all of this, the trade cross currents, is playing into the picture for commodities. Brent crude up by just about 0.1%. We did see some weakness as we saw the dollar strengthening, conviction really waning that the US will kind of reach the agreements. But of course, now we have had that securing of the 15% tariff pact with the EU, and potentially also an extension of the deadline with a trade truce with China China as well. Iron ore off by just about 1.3%. Some concerns over those industrial production numbers out of China, despite, of course, some of that sort of rebalancing when it comes to steelmaking capacity in China still underway. We're also seeing gold off by just about 0.2% at the moment. Most metals at the moment are kind of drifting a little bit lower as we get into a very risk-heavy week, particularly when it comes to monetary policy. More ahead on the Asia trade, this is Bloomberg.
Take a look at how Japanese assets are setting up for the market opens in about 20 minutes. We do have the Bank of Japan policy decision. No change expected this week after the U.S. and Japan already struck a trade deal. Of course, we have seen Japanese stocks really gaining ground on that decision. The RSI on the topics already in the overbought territory. But what we'll be watching also, of course, is the political landscape in Japan. Prime Minister Shigeru Ishiba says he won't step down despite mounting pressure from within his party after bruising upper house election. Ishiba insists he must stay to oversee the new U.S.-Japan trade deal. However, a new Nikkei poll suggests his cabinet's approval rating has slipped 5 points to 32%. Let's bring in Bloomberg opinion columnist Garode Reedy. Garode, so how much does this really matter to Prime Minister Ishiba? He was never a particularly popular prime minister, and it took him so long to get here.
Yeah, it's maybe that's one of the reasons that he's digging in for so long. As you say, he spent a long time, his entire political career really, to becoming prime minister, running 5 separate times to be leader of the Liberal Democratic Party. He's really digging in now. You mentioned there the Nikkei poll, and there was other polling that saw his numbers drop, as we would expect. There was also a very odd poll yesterday from the Mainichi that saw his cabinet approval rating go up despite the election defeat, and also listed him as the person most suitable to be prime minister. In other words, people responding to the poll were saying that he should stay on as prime minister. It's a very confusing situation right now in Tokyo. I can't recall seeing something like this where we saw multiple media reports that suggested basically that his resignation was imminent, and he himself is digging in and saying he's not going anywhere. It's quite an extraordinary situation, and I think it's going to continue to be a point of focus over the next coming weeks until we get some sort of clarity about his future.
And that sort of suggests that it could swing in many ways, right? How much does it also depend on exactly what we actually see in the details of this trade deal?
I think that might be one of the things that is in focus. Is Ishiba wants to stay on, so he gets these details ironed out. There does seem to be, despite the agreement last week, there seems to be a huge gap in between the expectations on both parties' sides, or at least what they're saying in public about what they believe the agreement was. Ishiba, may want to continue to use this as an excuse as well to stay on and say, well, despite the election defeats, this is the deal that I have negotiated, so I need to stay on until we have something in writing. We see in I think in a lot of these deals there's a big gap, a comprehension gap between the two sides, and I think when it comes to Ishiba, we're going to have to see where it goes and whether he's even still in power now. The LDP may try to remove him using a recall process, basically, to choose a new leader. So he might ultimately not have all the power in this matter. We'll have to see if he's able to stay on and iron out these details with the Trump administration.
Bloomberg opinion columnist Garode Reedy there with the latest on the political landscape here in Japan. We're also, of course, following the tech landscape. Children of the 80s and 90s would remember the logo of TDK during the era of cassettes when the company dominated the magnetic tape space. And, well, that technology is now just a relic of the pre-digital era. TDK is hoping to remain at the forefront of tech innovation. Through its 7C strategy, the company remains a major player in designing and manufacturing components from batteries to sensors that enable the latest technologies. I spoke to CEO Noburo Saito and began by asking how they're seeing the trade deal between the U.S. and Japan.
We will need to understand more in details about this particular, Japan case. And of course, we'll need to keep monitoring the other cases, not only limited to here in Japan, but also the other countries.
At least, is it a brighter outlook than when you told us earlier this year that you could take an operating profit hit of about 10% for fiscal 2026 year on year because of the uncertainty, partly related to tariffs?
Yeah. It's first time for our company TDK that we made kind of two scenarios that facing this kind of a very dynamic situation. But I hope that the impact is going to be minimized. But it's actually out of our control.
Have you seen the impact so far?
A little bit.
Are we talking about costs? Are we talking about demand globally?
Actually, overall, I cannot pick up only one. That kind of impact is kind of on broader basis. Right.
Should I assume that's also a lot to do with China because more than 50% of your revenue comes from China?
China is one of the our major business market. But again, as I said, we're doing business on global basis.
China-U.S. tech rivalry continues, and we know that when it comes to TDK, you do have subsidiary Amperex assembling batteries in China. Have you heard any concerns about China-made parts?
Yeah, actually, even before we started facing this situation, that we have been proceeding our kind of strategy about the production site called China Plus. China for TDK remains extremely important market for the future as well. But in addition, we have already started expanding our production site of battery into India.
The new factory in India is supposed to go online in September. Is that on track?
On track, yes.
What are you seeing as the ratios between production and demand when it comes to India versus China?
At this moment, India, much smaller.
Artificial intelligence, of course, is very important for TDK, especially when you want to grow the ecosystem around AI. How does the China market play into that? Because China seems to be a very isolated case when it comes to tech development and AI as well, as opposed to the rest of the world.
We see this AI market as an AI ecosystem. Not only these popular applications, but also like a smartphone or ADAS in automotive. Such kind of the wider scope of the application we are defining like AI ecosystem, which will be positively contributing to the transformation of society.
Because you have a new generation of batteries to power these smartphones as well for AI tasks, right? And your biggest consumers are Apple and Samsung. So tell us a little bit about how that market is growing right now for TDK and how important that is.
The development of data traffic in the smartphone, that the higher energy density battery, will be more and more required. That's kind of trend, I see. Therefore, with our, unique kind of technology, we will be able to make a bigger contribution to this growing, demand.
Is that why you're adopting also a strategy of buying out more companies that are in a way related to artificial intelligence? I understand that you recently acquired SoftEye, for example, which also deals with smart glasses.
This SoftEye, which we newly acquired, is providing kind of the eye tracking and also object recognition together with ultra compact battery, several sensors, electronic components, plus such kind of the very differentiated with ultra low power solution is going to contribute a lot also to develop this future growing applications.
When it comes to developing these new technologies, where are your R&D centers as well, and how much are you investing in trying to get all of this brain power for these new innovations?
TDK keeps investing 10% for R&D, not only looking at the short term, but also looking at long term. So new product or new technology, which will be growing in the long term, also will be contributing to the huge problem looking on this AI ecosystem development. Power consumption is a huge challenge or problem in the coming future. But for us TDK, this power consumption, this challenge is an opportunity.
PDK CEO Noboru Sato, they're speaking with Shery earlier. We do have some breaking news when it comes to the CK Hutchison development, saying that they may invite a Chinese investor to join their port deal. CK Hutchison remaining in discussions with members of the consortium with a view to inviting a major strategic investor from China to join as a significant member of the consortium. That's according to its latest HKX filing. And we have seen sort of regained enthusiasm from investors for CK Hutch, despite that delay that we've seen in the company's plans to sell ports. That optimism has been fueled by news that some investors, including the likes of China COSCO Shipping, are finding its way into that global deal. So that possible involvement is perhaps what we're seeing that sort of alluding to in this latest HKX filing. CK Hutch remaining in discussions with members of the consortium. The view is to invite a major strategic investor from China to join as a member of that consortium. Shery.
We now have breaking news also on Samsung. We're now hearing that it signed a 22.8 trillion won chip manufacturing deal with a client. We don't have more details than that, but we know that Samsung, of course, has suffered when it comes to chip manufacturing, especially when it comes to advanced semiconductors. Its profit fell for the first time since 2023. We're talking about a 56% plunge in operating income for the June quarter, although it's been reasserting its position as the top Korean stock, with its share rising about 10% in July. And we are now hearing from sources that Samsung has signed a 22.8 trillion won chip manufacturing deal with a client. We have more ahead. This is Bloomberg. Welcome back. Already this year's best performing major market, South Korean stocks are becoming a magnet for foreign investors thanks to regulatory reforms. Asia Equities reporter Sang-mi Cha joins us now with the latest. And Sang-mi, what a difference just a few months makes, especially after the presidential election, with more clarity on the political landscape. What are we seeing in terms of inflows?
Yeah, well, the overseas funds that had dumped Korean stocks over the past 9 months have piled back in, starting in May and June. They have bought about 2.9 billion. And in July alone, we're seeing about 3 billion that they have added. So we're seeing this trend that all the foreign investors are coming back to Korea after the martial law, the challenges that they have experienced. And then obviously after the June election, that is actually boosting the markets right now. We see some of the Wall Street banks like JP Morgan, Goldman Sachs, and Citigroup all upgraded Korea stocks starting from June. And JP Morgan has actually put out a very bullish sentiment where they said that they expect Kospi, the benchmark Kospi, to reach 5,000 over 2 years. That's from 3,200 levels that we're seeing right now. That actually echoes that ambitious goal the current administration actually has to actually boost Kospi to 5,000, and they have come up with an ad hoc committee called Kospi 5,000 to actually tackle that. And all this goes back to the idea of resolving Korea discount. Korean companies are undervalued relative to their peers in Japan or Taiwan precisely because of that poor corporate governance that has been a long overdue issue, and obviously that is because of that weak shareholder rights. And so there's that optimism now that this government is actually serious about tackling that Korea discount.
So what are we expecting when it comes to the next rounds of reforms?
Well, in the beginning of this month, we've seen the first round of revision to the commercial code pass, and that has allowed the fiduciary duty of the board members. So that makes board members accountable for all the shareholders. Now, we're expecting another round to that revision, and that would be including the cumulative voting, which would allow a lot of the minority shareholders to actually voice their rights and potentially elect at least one member of the board that is in favor of their interests. And so that would be a pretty significant change in terms of corporate code that we have been seeing, and that would, and then there are other rounds that is expected.
Xi Qiao, Bloomberg's Asia equities reporter, as we head towards the Korea market opens. Also Japan, take a look at how we're setting up for the session. We are seeing Nikkei futures gaining to the upside of 0.25% at a time when we're following Samsung as well in South Korea has just signed a 23 trillion won chip manufacturing deal with an unnamed client. The market opens are next. This is Bloomberg. This is Asia Trade. We're counting down to Asia's major market opens. It's a busy week. We have 40% of the S&P 500 companies reporting earnings this week, the busiest in the earnings season. Central bank decisions in the U.S., Japan, and of course Haidi, that trade deal between the U.S. and the EU as well.
Yeah, we were talking just late last week about this sort of 15% baseline being potentially a new prototype after that was reached with Japan. And it looks like the EU has that benefit too. Plus, also potentially that pushing back of negotiations with China by another 90 days is what we're hearing.
And it was that trade deal that you mentioned, Heidi, with Japan that sent Japanese stocks on a tear. We're talking about the topics. 14-day RSI already being in overbought territory. Japanese stocks fell a little bit on the Friday session, but we continue to watch for more upside, given, of course, the optimism right now and the global risk sentiment. We are watching the Japanese yen holding at that 148 level on a week, of course, when we do have the Bank of Japan policy decision. No change expected this month, but do watch out for the JGB space because 2-year yields are already near highs that we haven't seen in 17 years. Nikkei futures pointing to the upside of 0.2%. Take a look at how South Korea is also coming online because one stock that we'll be watching there is Samsung. It's now announced a 22.8 trillion won chip manufacturing deal with what it calls a major global company that it hasn't named. You can see the pop right there of more than 3% at the open. When we do have the Korean won also strengthening against the US dollar, the Kospi has been one of the best performing major markets in the world, and we're talking about inflows just for this month from overseas of more than $3 billion, Heidi.
Take a look at where we're shaping up when it comes to just that stagnant start to trading here in Australia. We're seeing a bit of upside, about 0.1% there. Of course, a lot of these trade cross currents, positive as they are, will be positive as a proxy for Australia as well, particularly if there is that extension of that US-China truce. Of course, the Aussie dollar trades as a strong correlation to any sort of positivity or negativity when it comes to China-related news. And positivity would be appreciated given some of the domestic data, particularly when it comes to industrial production, has not been particularly encouraging. Taking a look at the Aussie dollar, we are sitting at about 65.75 at the moment. We're also watching Treasuries, given it is a big week, of course, when it comes to the decision from the Fed, some of the, of course, turmoil between the President and Fed Chair Jay Powell that's still sort of being worked through, as well as these broader sort of concerns and uncertainty over trade. The dollar index, interesting, did rise on Friday, but did have that weekly loss. So we're seeing a little bit of pass-through when it comes to Asian currencies there. Watching dollar China in light of these talks in Stockholm. Also watching Treasuries at the moment, but I should also mention crude is seeing a little bit of an uptick in the morning trading session here in Asia, despite weakening through last week. But some of that trade news is clearly benefiting commodities demand too, Shery.
Yeah, let's start with those negotiations because the U.S. and European Union have struck that trade deal imposing a 15% tariff on most EU exports, including cars. As part of the pact, the bloc will ramp up purchases of American energy and boost investment in the U.S. while sidestepping President Trump's threat of steeper levies.
We've reached a deal. It's a good deal for everybody, I believe. And I think you were saying this is probably the biggest deal ever reached in any capacity, trade or beyond trade.
It is.
It's a giant deal with lots of countries.
We have a deal. We have a trade deal between the two largest economies in the world. And it's a big deal. It's a huge deal. It will bring stability. It will bring predictability. That's very important for our businesses on both sides of the Atlantic. It's 15% tariffs across the board, all inclusive.
Let's bring in Bloomberg News Desk editor Jill Deasy and our China correspondent Min Lo. Jill, let me start with you and the U.S.-EU trade deal. Of course, the devil is in the details, so what do we know so far?
Well, I would say that we're actually missing quite a few details, and there's a few things about this deal that don't entirely seem firm, so I do still think that we have to wait. I mean, obviously, first of all, I have to caveat the fact that trade deals normally take years to ultimately develop and hammer out. We've really only been at this since about April or so. What we do know so far is obviously that overall 15% tariff also applying to automobiles. It certainly does imply that while that's lower than what Trump has been threatening in recent weeks, it is, sort of a bump up from some initial expectations toward the start of the year that Trump would install some kind of a 10% baseline. So, you do have that 15% number. You do have, these hundreds of billions of dollars that the EU has pledged apparently in investments in the U.S. Some of that around the purchase of American energy products and such, along with some other investments that Trump has really touted here. But to me, there still seem to be some things that aren't entirely hammered out here. So Trump said that 15% tariff wouldn't apply to pharmaceuticals and metals. So these are two industries that, targeted or potentially targeted by additional sectoral tariffs. But then Ursula von der Leyen is saying that actually the pharmaceuticals component of this is covered by the 15% tariff. I think that's a really big sticking point here because, when you've got the U.S. potentially in the next couple of weeks handing down additional sectoral tariffs on things like pharmaceuticals, also things like semiconductors and such. I think really kind of sort of hammering those things out and trying to figure out the difference between what's covered under this reciprocal tariff agreement versus what's covered under those sectoral tariff agreements. Remember, we also have additional things like, steel and aluminum, of which it's a bit fuzzy how much of that is exactly covered in this deal. I think that does kind of open up this picture where, yes, they have reached a deal, at least in part here, but, it still seems like we have to learn a lot more about what's actually happening here. And I think really kind of hammer down some of those details, particularly those pharmaceutical ones.
And I mean, it's interesting, right, because as sort of prolonged and painful as these Japan and EU trade talks have been over the past few weeks and months, certainly one expects the China-US talks to be more complicated. Is that why we're hearing that this truce could be extended by another 3 months?
Yes, Scott Bessent had basically set the baseline expectation here. He said that, or he signaled that this truce could be extended. He didn't say by how long, but SCMP has reported based on sources that it could be extended by another 90 days. This could be because both countries are now looking at setting up for a potential meeting between the two leaders, President Xi and Trump, perhaps in October at the sidelines of the APEC summit in South Korea. And so in order for that to happen, they really need to set up the right atmosphere for it. And so a trade truce where both sides agree not to escalate things further could be a good way to ensure that meeting between the two sides happen. But yes, a lot is at stake. As Jill mentioned earlier, the sectoral tariffs particularly complicating things further because we know the U.S. is already investigating a number of sectors, including semiconductors, pharmaceuticals. Those sectoral tariffs are not yet announced. If the two sides, China and U.S., agree to a trade truce, will it be, derailed by further sectoral tariffs that come out later on? And will China be exempted from some of these sectoral tariffs? That's a big question as well.
So, Min, when could we see that Xi-Trump meeting, and what more work needs to be done before they actually meet?
So the meeting could potentially be in October at the sidelines of the ASEAN summit in Kuala Lumpur, or perhaps at the sidelines of the APEC summit in South Korea. Of course, in September, there is a military parade in Beijing as well. That could be another potential for the two sides to meet. But when it comes to the trade deal, there are a few scenarios that Bloomberg Economics has gamed out. One is we don't see a deal, essentially continuation of the status quo. That is a possible scenario. But if a deal does come to pass, it could look like something that is similar to the Phase 1 trade deal, maybe a commitment to buy a certain amount of U.S. goods. Howard Lutnick already indicated that purchase commitments from China, especially when it comes to agricultural goods, could be on the table. But the question then is, what is the U.S. willing to give in order to get the purchase commitment from China? Because remember, those agricultural goods tariff from China came in retaliation to the fentanyl-related tariffs of 20%. China is likely going into these talks hoping hoping to get a reduction on the fentanyl-related tariffs, especially given they have made some efforts to, add 2 more ingredients of fentanyl into this restricted list. Trump has similarly praised the effort there. Is this enough to get the U.S. to lower tariffs? For now, some sources are saying chances are still very slim.
And Jill, of course, now that we've got Japan and the EU sort of out of the way, at least these big headlines, we're expecting the Korean Finance Minister, the US Treasury Secretary to meet in the coming days. What concessions are we potentially hearing about, particularly when it comes to things that I know the President, it matters a lot to him, like shipbuilding, like rice exports?
Yeah, I think that when it comes to Korea, ultimately, it sounds like they're already considering some investments in the U.S. That would track pretty well with, what we've at least heard out of these announcements from the EU and Japan as well. Also, maybe agricultural products are under consideration here. I think that if you're Korea, ultimately, you just really want to knock down that 25% tariff rate that they've been threatened with. That would be up from 10%. Maybe it could be that, given, some of these economies that seem to be getting a little bit more attention and care in some of these individual talks, that they could be on a track where their overall tariff rate, that sort of bench line looks like something that Japan or the EU would get, that 15%. Maybe it creeps a little bit higher. I think it kind of depends on how those negotiations go. But also, if you're Korea, I think you're particularly worried about some of those sectoral tariffs, as are, everybody else, when it comes to autos. Obviously a lot that's under discussion, in the coming days as these two sides try to hammer something out before that August 1st deadline on Friday. But again, I think just kind of shows, as do all of these deals and all of the still confusing and sort of unclear parts of them, that these are really, really complex trade deals. Maybe we get an announcement, maybe you get some top-line figures that we can kind of review and sort of glean from. But it does kind of seem that even with those top-line deals being announced, there's still a lot more to go before these trade pacts are ultimately hammered out.
Bloomberg News Desk editor Jill Desis there, also our China correspondent Min Min Lo, they're joining us in Hong Kong. Well, let's take a look at the market perspective with Xi Qiao, who's the financial advisor and managing director at UBS. Really great to have you with us. We've seen a little bit of raising of expectations from Goldman's when it comes to what they see as the benefit to the Japanese market, for example. But by and large, this sort of seems to be the best case scenario that investors and financial markets have been assuming for quite some time.
Yes, absolutely. And we continue to believe that, the current bull market is intact and U.S. equities have scope to rise further. Earnings are coming in very strong. The economy is strong and we have a strong consumer base. So any volatility in the near term, that certainly can be protected with any type of hedges. But I think until the end of the year, our view on the market is still very positive.
Where are you seeing opportunities, given how sort of exuberant investors have been, and also given that we still have a great deal of uncertainty when it comes to the data side, earnings, of course, coming in thick and fast, as well as some uncertainty as to how central banks can progress from here?
Yes, next week, obviously, earnings is going to be a big tech week, and we still feel very strongly about U.S. tech, particularly driven by AI. Some of the large mega cap stock has done very well this year, and we continue to see that momentum going forward. Healthcare, financials, and utilities are all some of our preferred equity sectors. And of course, looking outside of the U.S., we do see China's tech sector coming back as well. India, Singapore are some of our preferred countries outside of the U.S. and also very high quality equities in Europe are starting to come back as well. So those are just some pockets that investors can start to take a look if they want to get out of the U.S. and just kind of not get out of the U.S. but expand beyond U.S. equities.
Goldman Sachs has just raised Topic's target to 3,200. We have the Japan-U.S. trade deal. We've seen net inflows into the Korean market as well. Are these two markets that could be appealing, given also that they're heavily exposed to tech?
Yes, I mean, certainly. I mean, I think Japan, especially for Japan, the lower tariffs on autos could definitely improve the country's real GDP growth, and it really removes a key downside risk for Japanese yen as well. So, similar to Korea, that is also a market that has not traded very well, but it's starting to be a very good pocket of growth there. And of course, we continue to maintain our attractive view on China tech with double-digit earnings growth outlook for 2025.
And yet we continue to see, of course, a downside in Chinese eco-data industrial profits falling for a second month. How much of a headwind is this, despite the fact that we're getting some more positive lines when it comes to the trade framework with the U.S.?
Yes, certainly. I mean, the trade deals are still going to take a little bit longer, but with some of the agreements are far more than just a handshake deal, right? I mean, we have to have more comprehensive details, which will take time to reach. But I mean, we certainly believe that those deals are coming along, and so we are pretty positive on China and on Asia in general. Specifically, we want to take more of a selective approach with China, with top picks in leading AI, cloud, and EV companies. Those are more of the focus areas we have at this point.
How closely are you following the sovereign debt markets? We do have Treasury auctions this month, and not to mention, of course, the Treasury's view when it comes to quarterly debt sales and central bank decisions.
Right. I mean, we're certainly following that. I mean, our policy outlook is we believe that markets have already priced in higher deficits and that the U.S. debt remains sustainable. We expect the yield on the 10-year Treasury to decline to around 4% by the end of the year, and global central bank rate cuts are expected, and that should provide additional tailwind to bonds and also inflation. So we are pretty positive on rate cuts in general in the U.S. and globally.
Xi Qiao, financial advisor and managing director at UBS. Always good to have you with us with a look ahead, of course, to all that will move the markets this week. We're already seeing European futures moving a little bit of upside when it comes to DAX futures, up 0.9%, together with the euro. And remember, the euro already gained about 1% last week. We are now seeing the reaction to that EU-US trade deal that puts 15% tariffs on most of those US imports going from the European Union. That we have heard from the German Chancellor calling this a sustainable deal. We've also heard from the European Commission President calling this deal stable and predictable. But of course, we're still watching what happens to metals duties as well, and to the purchase of billions of dollars in energy products from the US. Haidi.
Still ahead, Shery, on the Asia trade, our exclusive conversation with Wang, who's the brains behind Alibaba's cloud and AI division. He shares what's next for artificial intelligence in China. This is Bloomberg. The founder of Alibaba's cloud and AI unit says 90% of the technology and services that we've sprung up since OpenAI's ChatGPT could be gone in under a decade. Wang told us exclusively that developers need to think creatively about applications to propel the next stage of AI development.
I would say, as just like a single organization or single person, you really cannot go that fast for a long time, okay? You collapse, okay? Like, I can work in for 3 days and without any sleep, but not anymore, okay? Not anymore, and you really cannot work 30 days and don't have any sleep, okay? There's no way you can do that, okay?
Work ethic in China is famous.
But I would say collectively, we can have a very fast iteration, okay? So that's why I really like a stubborn mindset. So basically, DeepSeek could do something very fast, okay? And then we also have Queen, okay? And then we have Kimi, okay? So So collectively, and we can push that fast. I think that's okay. Actually, that's what I think is important. Otherwise, why we need that population? Okay. So that's why when people get together, and it's not just for competition, whether you win or not. It's basically you can have the very fast iteration of the technology because of this competition, or because and you work fast this time and you slow a bit, and then other guy move very fast, and eventually we slow down a bit. And if you're good enough, you can catch up again. And I don't think it's brutal, but I think it's very healthy because, and when we work with the people that is very competitive, that would make you much more competitive, because that was the way how I think the new technology would be invented. Yeah.
Yeah, you're talking, I guess, about more of a marathon, not just a sprint race.
Yes.
Is there space, though, for new contestants to enter that race today?
I would say, at least for the AI, it's a marathon, because I think nobody could really see, if it's a long journey, it's definitely in the very beginning. Okay.
I think something that we see right now is certainly money that's being directed at strong talent.
Yeah.
And there's stories, of course, in Silicon Valley we see of people that are getting hundreds of millions of dollars. And what do you think about that?
I think it's. I don't think it's the, let's see. It's a typical way of doing things. Okay, I would say that. The reason is very simple. With our example, when I started the Alibaba cloud, the first thing I did, that was in 2008. The first I did was with the Silicon Valley, and to try to get talent. Okay. And after talking to all the people, and you realize actually we don't have much talent there because it's new.
Okay.
So. And also, with some of the talent, it's just too expensive, okay? And too expensive basically means, okay, you don't know whether the competence is there. Why need to hire these people? So it's really about the innovation. So when you are in the early stage of innovation, I don't think talent is a problem, because the only thing you need to do is to get the right person. Not really the expensive person, because if the new business, if it's true innovation, that basically means it's talent. Nobody care about them. Okay, otherwise we're going to working on that. So for today, what happened for the Meta is because they are very much focused on the existing success of the business and existing establishment of technology. That's my view. Okay. So I think we have a tremendous opportunity to look at technology nobody knows today. And these are talent. But these are, I can't say it's cheap, but it's available for you, okay? So that's really about the vision, where you want to go. And there's a lot of similar things, happened during the last 20 years also. Whenever everybody knows that these are talent, and it's better for you not to get in. And at least that's not new. That's my so like personally that I hired the Zhou Jin. Now he's the leader for the Queen. Okay, you probably met him, when you were in Hangzhou. I personally interviewed him. 15 years ago, and we got talent now. He's leading the Queen. Yeah, but that's
so there's not really any justification. Then it sounds like you think for such huge salaries.
That's not what the I'm sorry. What happened in Silicon Valley is not the winning formula. That's what I believe. Yeah.
Alibaba Cloud founder and Zhejiang Lab director Wang speaking to Bloomberg. You can watch more of that interview later on the China Show at 10:30 a.m. Hong Kong time. We have more ahead. This is Bloomberg.
Take a look at what we're watching when it comes to trading in metals. We are seeing a bit of a divergent picture. We're seeing primary aluminium prices up by just about 0.2%. Copper at the moment sitting a little bit higher despite pairing a second weekly advance. A lot of base metals have kind of been treading water on expectations of progress when it comes to these trade talks. Iron ore at the moment still pulling back with concerns about China's commodity clampdown being limited.
Japan and South Korea reversing some of those earlier gains, with the Nikkei now down and being led lower by technology companies. We're talking, of course, after being on a tear with the topics already in overbought territory. The Kospi is down 0.3%, but tech is actually one of the big leaders. Of course, we heard from Samsung Electronics that they signed a $16 billion chip manufacturing deal. Premier Li Qiang says China will lead the creation of an international AI organization to ensure that technology does not remain in the hands of only a few nations. He made the announcement at the World Artificial Intelligence Conference in Shanghai. The event is showcasing cutting-edge Chinese technology attended by tech leaders from Tencent to ByteDance and startups including Jipu AI and Minimax. Our Asia tech correspondent Annabelle Drulers is there and standing by with our next guest. Annabelle.
Thanks, Shery. Yeah, it's not just the focus on government officials. There's also the businesses that you mentioned that have been here, but also it's really the focus on the investors that are showing up at WAIC as well. And I'm pleased to bring in our first guest of the morning. This is the Monolith Management co-founder and CIO, Tim Wang, joining us this morning. So, Tim, it's day 3 of the event. What stood out to you so far?
Thank you for having me, Annabelle. I think it's the sheer amount of people here, the excitement, and the level of activity that strikes me most.
I mean, we're 6 months now into the DeepSeek moment. How long do you think it lasts, and what does it look like as well? What's the shape that it takes in China?
I think it's still very early. I mean, as you mentioned, it's 6 months into the DeepSeek launch, DeepSeek R1 launch. But if you look into what really happened in that 6 months, it was overshadowed by tariff war for the most part. And I think the WIC is coming back into the right course for the entire industry in China. So if you look into 6 months into the ChatGPT moment in the US, probably people realize that it's still very, very early. So we hold the same view in China. We think probably 2-3 years down the road, I mean, a lot of good developers are going to coming down.
I mean, in China in particular, competition is intense, no matter which sector or industry that you look at. But which applications are standing out to you in particular?
I think right now, I mean, it's too early for us to tell the applications. But I mean, I think from the sheer amount of activities here and all these new applications coming up, I think we feel super excited about the infrastructure, from the software infrastructure to the hardware, the data center, the hyperscalers. I think they serve as the enabler for all these activities to happen.
I think when you go into the event, there's sort of a few different areas that you can look at, but if humanoids, for instance, is taking up an entire huge portion of the venue. I mean, what stands out to you about that? And this is an area where China is perhaps looking to lead the world in this industry.
Yeah, you're absolutely correct. I think if you went into a consumer electronics conference 10 years ago, you would probably see half of the space was occupied by smartphone players, and I think we're experiencing the same thing. We have a humanoid robot frenzy here. Everybody try to break into the space. It's still too early for an application, and I think probably a lot of these companies are not going to last 5 years. I mean, not going to exist in the 5 years down the road. But I think the entire concept of healthy frenzy is very good for the industry to develop. I think, yeah.
What is it? Share more on that healthy frenzy. I mean, why do you think it is healthy? And then also you mentioned about maybe some consolidation you see. Why is that the case as well?
I think it's healthy in a sense that everybody is still too early. You don't see. I mean, companies are building different a proof of concept, and they're trying to find product market fit, and they're coming up from all fronts. You have people building the robot arms, you have people building the robot dogs, and you have people building humanoid robot but doing different things. So I think it's still in a very early stage, and frankly, a lot of these companies are still underfunded. So I think it's a frenzy, obviously, but it's still healthy. It's still very early.
Underfunding, Monolith, you've got sort of the public equity side, you've also got the VC arm as well, and you meet a lot with founders. What are those kinds of conversations, and what's the number of conversations that you're having as well?
Oh, that's a very interesting point. I think to give you, to put into context of the frenzy here, as I mentioned, we have a venture arm, and I think we feel like we've talked to more funders, prospective funders this year. The sheer amount of conversations we have is more than what we had in the past 2 years combined. So that's where we see the activity level coming back. And I think funders are super excited. I think in the past 2-3 years, when ChatGPT launched, a lot of people feel like there's a new paradigm shift. But they don't know how to build a new application upon the new technology. And it took them literally 1 or 2 years to get a sense of how powerful the technology is. And I think people are becoming more entrepreneurship this year, coming out, building new things this year. So I think this is actually the starting point, the beginning of everything this year in China.
There's challenges though. You think about sort of the access to funding, the competitive environment. Is this a good time to be an entrepreneur in China, do you think?
Oh, I think it's the best time to be an entrepreneur in China.
As an investor, how do you look about getting access to some of these different key themes?
Well, I think different themes are at different stage. In the hyperscalers, in the data infrastructure, a lot of these companies, from semiconductor to actually the guys who run the cloud, they're all public. So I think our assessment is like 80-90% of the opportunity set in the data infrastructure and cloud infrastructure is public. But if you look into go into areas like humanoid robot, autonomous driving, or some of the other areas, you probably see 60-70% of the opportunity set. Number of opportunities are actually in private, but we also have a public angle. I think, as you mentioned, the humanoid robot, you probably have hundreds, if not thousands, of robot companies in China, and then they all go into similar supply chains. They are all buying similar key components, and if you dissect into the supply chain, the key components, they are pretty much the same. You have the reducers, you have the motors, and they source that from China, from more importantly, I think from this region. And some of the Korean companies, Japanese companies are also benefiting from that.
Yeah, I think China can produce up to around 90% of the components that are needed maybe for a humanoid robot. But you mentioned Japan, Korea. 75% of your portfolio is sitting in the Asia region. Right. What stands out to you as well in these markets?
I think within the border AI's theme, I think Japan has some of the semiconductor components and also the robotic components and the key components like reducer. Some of the motors are being imported from Japan. If you want to make a very sophisticated hand, you need some of the components from the region. But if you look into other areas, for example, like if you want to build gigantic data centers, just as what the U.S. has been doing, you need more power. You need probably nuclear power. You need a lot of these new power supplies, and some of these names are, coming out of China and coming out of Korea.
The other 25% is in the U.S. market. Still, so where do you see that, or how do you see that performing as well moving forward, given that the valuations, of course, look very different?
Oh, we started to get a little bit, I think we're obviously very valuation aware, so that's why that region is represented only about 20% of the entire portfolio, but we still see unique opportunities. You have some of the semiconductor companies and key components in the data center that you cannot find anywhere in the world.
Tim, thanks very much for joining us this morning. That was
Tim
Wang there, the Monolith management co-founder and CIO. But Heidi, I'll send it back to you.
Our Asia Tech correspondent Annabelle Drew is there in Shanghai at the World AI Conference. We'll be getting more from the conference ahead with Deep Robotics America's director Eric Wang joining the China show to talk about the outlook for the sector. Chinese firms working to show their relative value versus their US peers. Let's get you caught up with some of the corporate headlines that we're following. And Meta CEO Mark Zuckerberg has named Sheng Zhao as the chief scientist for its new superintelligence AI group. Zhao joined from OpenAI in June and was part of the team behind the original version of ChatGPT. The AI researcher will help lead Meta's new group aimed at building models that can perform tasks as well as humans or even better. Tata Consultancy Services is reportedly cutting its global workforce by about 2% due to rapid changes in the tech industry. The CEO of Asia's biggest IT firm told Money Control that the cuts of around 12,000 roles will hit mainly at the middle and senior levels. India's software services industry faces challenges, including growing shifts into AI.
We're following Samsung Electronics bucking the trend with the Kospi down is gaining more than 2%. It says it's landed a $16.5 billion chip-making deal with what it calls a major global client. The contract runs from July through the end of 2033. And let's bring in Bloomberg Intelligence Senior Analyst Masahiro Wakasugi. Masahiro, we still don't have the name of this global major company, but what can we gauge in terms of the revenue impact on Samsung?
Yes, I think that the contract is from this year to 2033, meaning that probably the client should be adopting the very advanced technology. So in that case, probably AI-related or smartphone-related customers should be the option. And probably if we calculate the annual revenue impact, it could be around maybe boosting 10% of foundry business going forward for Samsung. So basically, that's a good contract, I think.
What would be a potential impact on revenue?
Yes, as we commented, it's a total contract is $16.5 billion. So, and the duration would be the 8 years. So, if we divide this number, probably annual contribution could be something like $2 billion. And maybe the contribution on the total semiconductor business may not be so large. But if we just focus on the foundry business, that could potentially boost revenue by, say, around 10%, I think. So I think that in that case, utilization will improve going forward. So that's good for the profit as well for Samsung Electronics.
Masahiro, what does this mean for the broader industry as well when it comes to the options and availabilities of all of these chips if Samsung becomes a more active player?
Yes, so at this point, we have a little bit unique industry landscape at this point because for the fabless chip makers, they have to go for TSMC if we would like to make some chips. But going forward, if we can have more availability from Samsung or maybe could be Intel, that's more healthier for the industry because fabless customers can have more options to choose the foundry outsource contract partners.
A Bloomberg Intelligence Senior Analyst Masahiro Wakasugi there. We're staying on tech. It is a big week when it comes to earnings in the space. In the US, we're getting more results from the Mag 7. Meta's report could show sales growth at its slowest in 2 years. The company will also likely be quizzed about its unusually high comp offers to lure AI talent. Meanwhile, Apple could see its Greater China revenue rising for the first time in 2 years. Aside from the tech giants, we're also watching very closely these banker earnings, including from the likes of HSBC and Standard Chartered, with their efforts to cope with uncertainties relating to trade and rate trajectories in focus. More ahead here on the Asia Trade. This is Bloomberg. The leaders of Thailand and Cambodia will meet on Monday for emergency peace talks after President Trump threatened to withhold trade deals unless both sides cease hostilities. A border conflict that broke out last week has become Southeast Asia's deadliest in a decade. Avril Hong has the latest. We've seen President Trump pressing for a ceasefire, kind of putting everything on the table when it comes to these trade deals. So has that progressed the stance on peace talks?
Yeah, so we're going to see leaders from both sides, Thailand and Cambodia, actually meeting today. I mean, Trump essentially is applying trade pressure to end border clashes. This is something that we've seen earlier in the year, him doing with India and Pakistan. So similar playbook when it comes to a border clash in Southeast Asia. And he spoke to the leaders of Thailand and Cambodia over the weekend. The message essentially was that there can be no trade deal unless there is an end to the fighting. And this sort of sparked a flurry of diplomatic activity. We saw the Malaysian Prime Minister Anwar Ibrahim, who is ASEAN chairman this year, eventually managing to get both sides to meet in Kuala Lumpur this afternoon. And it's also worth highlighting that, kind of underscoring the importance of all this. Marco Rubio has also talked about how U.S. State Department officials are in Malaysia to assist with peace efforts. It's not clear whether all this is going to be enough for some form of lasting peace agreement to be in place, but there's certainly a lot of pressure given how close we are to the August 1st trade deadline, and neither Thailand nor Cambodia has a trade deal in place with the US, so they could still face 36% tariff rate.
Where do Thailand and Cambodia stand in all of this as we head towards this meeting?
Yeah, I think neither side wants to antagonize Trump at this stage. They are both open to some form of a ceasefire, perhaps more so on the Cambodian side. They say that they are open to an unconditional cessation of hostilities. On the Thai side, there seems to be some conditions being attached to any ceasefire. They want to see a bilateral resolution. They want to see the withdrawal of troops. And this is despite the economic stakes that Thailand faces. Its economy had already been lagging earlier in the year, given the slow recovery of tourism, and then the border conflict sparked a political crisis, which has been a sort of distraction that's put both markets and the economy, indeed, in pressure as well. And we already saw this fighting over the weekend continue on Sunday and spread to more areas from the Thursday re-escalation of the conflict. So there's certainly a lot at stake at this stage, and no easy solution.
Avril Hong there joining us from Singapore. Let's turn to the Philippines. President Ferdinand Marcos Jr. is set to unveil plans to boost growth in his fourth State of the Nation's address, fresh off his tariff deal with President Trump. Bloomberg's Andrea Colonzo joins us now from Manila. Andrea, what can we expect when it comes to economic measures that Marcos can actually push for at a time when he's already felt that political setback as well from elections recently?
Yeah, so Marcos has a single 6-year term, and he has 3 years left in this term. So in this State of the Nation address, he is expected to push for infrastructure programs that he wants finished through the final final stretch of his years in power. He is also expected, as in the past years, to push for his agricultural programs, because lowering prices of rice has been the centerpiece of his administration. But yeah, as you pointed out, these programs will need funding, and because of the election setback and his wavering popularity, Marcos is under pressure now to deliver, and we can also gauge there that he has diminished political capital. So it will be more tricky to pass revenue measures in Congress. So we will see how he will navigate that. More spending on welfare and maybe less support in Congress to pass revenue measures.
What about the sort of political angles? Are we expecting a reaction to the court decision on Vice President Duterte's impeachment?
So typically, Marcos has refrained from talking politics in his annual speech in Congress, unlike his predecessors, Duterte and Aquino. Maybe he will call for national unity. That's even during his campaign. That's his battle cry, his slogan. So, but we don't expect him to tackle tackle the impeachment proceedings on Duterte, because even when the impeachment trial is on and even before the decision, he has largely distanced himself from these proceedings.
What about tackling the issue of online gambling? We know that this sector has been seen as a potential source of new revenue for the government.
Yeah, so online gambling has been one of the hottest issues now in the Philippines. So there's, in Congress, actually, the debate now is how much regulation will be needed for this. So it's either just restricting access or outright banning it. So that's something that we will monitor and close watch in Marcos's speech. How much curbs will he pitch for this industry that's also contributing to government coffers? So we will closely watch if he will go for the side that's just seeking stricter regulation and taxes, or will he call for an outright ban like the Chinese-centric casinos during his last address, similar to this.
Bloomberg's Andrea Colonzo there in Manila ahead of his annual speech to Congress. Another story we're following: in the region, about 18,000 Malaysians have protested in Kuala Lumpur demanding the resignation of Prime Minister Anwar Ibrahim in the first such mass protest since 2018. The protesters rallied Saturday over alleged unfulfilled promises and controversies around his administration. Mahathir Mohamad, the 100-year-old former Prime Minister, headlined the rally and questioned Anwar's legitimacy after inconclusive elections. More ahead on the Asia trade. This is Bloomberg.
Take a look at some of the movers across Japan and South Korea, especially these firms with more than 30% revenue exposure to the European Union. Of course, we have that new trade deal between the EU and the United States. We're talking about 15% tariffs on most European exports, including cars. But we are still hearing some conflicting reports when it comes to what the details of that trade deal are between President Trump and Ursula von der Leyen. They have different statements when it comes to pharmaceuticals and metals tariffs. So we'll try to figure out what that exactly means in the next few days. But take a look at also how South Korean stocks are trading, especially when it comes to the shipbuilding side, because we heard from Tonga newspaper that South Korea is considering more U.S. rice imports, but also a shipyard acquisition. Of course, shipbuilding is a very strategically important sector for the South Korean government, and we're seeing those shipbuilders, most of them gaining ground after that report on more cooperation with the United States, Haidi, as those trade negotiations continue.
And trade has been kind of the big headline, right, particularly with these big deals between Japan, with the EU now sort of clinched, at least on a headline level, as you say. We're still needing more details of a lot of these pacts, but we are seeing that pushing through some optimism when it comes to S&P futures there. Taiwan futures also up by 0.9%. The issue now, of course, is that investors are kind of more freed up to look at the fundamentals, which will be that focus on mega cap tech earnings. These mega tech earnings could potentially see that near-term top for US stocks, particularly when it comes to some of these concerns over AI labor spending at Meta, for example, or could some of these companies surprise the markets to the upside? Certainly, a lot has already been priced in. Also watching China assets, given that we are hearing reporting of a potential further 90-day reprieve in this trade detente. That is it for the Asia trade. This is Bloomberg.